All right, folks, thank you very much. And we'll get started here now. This is choosing a target market. And this is very important when you're investing to choose that target market wise. I'm going to show you a three-step process here that I use to quantify or qualify a market. Now, what are we targeting? I guess that's the first thing we got to figure out, right? Are you doing residential? Are you doing commercial? Are you doing some tax liens? What are you targeting, right? Number two, focus that target, okay? Let's say if you're going to do residential, are you doing wholesaling? You're doing flips, long-term rentals, the such. The reason I say it the same way the commercial, it's commercial apartments, self-storage, office. You need to get focused because this is going to adjust your criteria, which I'll share with you in a minute. Okay, if you're going to do commercial apartments or multifamily apartments in A zones, your criteria is going to be different than if you're going to do in D zones or D class properties. Okay, so you need to get this understanding quickly. Okay, then you got to figure out what state you're going to be in. Are you going to be in your own backyard? Are you going to be out of state? And then if you go out of state or even in your own backyard, how do you know that that side of the state or that part of the state is good, right? I live in Michigan. I invest in Michigan. I don't know very much about the west side of Michigan. I'm on the east side of Michigan. It's 2 hours away from me. I have no idea. So I have to use a process, and this is the process that I developed to at least give me that ground level understanding of what the property is or the area is when I don't live there. Okay, and then step four is the cities or the MSAs and et cetera in that state, right? That's what I share with you, is to get down to that level of detail. And then five, when you get all this understood and done, you got your elevator speech, right? So when you're talking to brokers, you're talking to investors, what do? I'm a residential foreclosure, and I do residential foreclosures in southeastern Michigan cities of Allen Park, Ferndale, and Royal Oak. Or I invest in apartment buildings in the southeastern Michigan cities of Allen Park, Ferndale, and Royal Oak. Unit sizes between 8 and 10, and purchase price of $1 million to $5 million. Boom, done. They know what you're looking for. They get an understanding of what you're doing. And again, when you're talking to investors, as well as when you're talking to brokers, you want to be very specific. You don't want to call up a broker and say, hey, send me a deal. Well, great. What's a deal to them? They're salesmen. They're going to send you everything they got, right? And then you're going to be overwhelmed, and then you say, oh, this business doesn't work. Trust me. Been there, done that. Okay. So what are we targeting? I'm going to share with you today on this presentation here a three-step process. I'm going to show you where to get the state. I'm going to show you what city within that states are good. And then I'm also going to show you how to figure out the area around that property. Is it good or bad? Okay, based on your criteria. Okay, but one thing you got to remember, folks, is that you can change the property. Okay, but you cannot change the neighborhood. Right? Don't think that you're going to go into the ghetto and pick the worst street, and you're going to say, okay, I'm going to buy this property here, and it's going to just gentrify the rest of the area. Unless you have big money, unless you have a lot of legislation and stuff, it's probably not going to happen. Okay, so don't get caught into this. Don't fall in love with the property and negate the area around it. But again, if you are investing in that type of property, fantastic. That's not where we are. Okay. All right, step one. First step we're going to figure out and find out is our state or states that we're looking at doing, are they landlord friendly or tenant friendly, right? As the map shows you on the screen here, you want to, as a landlord, and that's what you're going to become, and if we're going to own several thousand units, you're going to be a landlord. So you want to work in cities and states and municipalities that are friendly to the landlord or friendly to business. Okay, on the screen there is a map from Rent Cafe. It's no longer available because they were bought by Yardi, so now you have to pay for the information. But I'll show you how to get the same information for free. But I love this map. Well, this shows you, landlord friendly and renter friendly states, right? You want to focus on landlord-friendly legislation in states. Why? Because if you've ever had to evict somebody, you want to make sure you can get that person out, get them evicted, and get the next tenant in. Okay, so how we do that, how we find these states, is basically we search the internet, our best friend, right? And what you do is you just put in landlord-friendly states, the year that you want to look for, right? And it'll come up with several different sites, blogs, real estate blogs, real estate companies, property management companies, a list of, landlord-friendly. What you're going to do is get a list on the right there of all the different cities, or I should say states, that are landlord-friendly. Now, the lists are going to start looking the same. So what I do is get 2 or 3 or 4 lists and figure out, okay, it looks like Indiana's showing up on all of them. Looks like Georgia's showing up on all. And then there's my list of states that are landlord friendly. Now you can dig deeper into that, but I'm going to share with you another way to do that. So now I've got my list, right? I got my list of, let's say I'm going to go into 5 different states. So the next step in this process would be okay, how do I validate this? How do I validate that Indiana and Georgia and Kentucky are good states? Well, 2 different ways. One, the Milken report at best-cities.org comes out every year with a top performing cities list. Okay, so this Milken report, or Milken Institute report, is a nonprofit organization that measures cities based and ranks them based on several different criteria. And here's the criteria they rank them on. All right, best performing cities ranks large and small U.S. metros according to their recent economic development and examines the trends and dynamics that continue to their growth. Comes to job growth, comes to salary, excuse me, short-term job growth, high-tech growth. So there's a lot of different things that they gauge. And a good thing I like about this, and I've been using the Milken report for several years now, is they'll actually compare it to the last year, right? Is this city or this state gone up or down? And another thing that they've changed this year, they actually go into the tier 1, 2, and 3 size cities, or MSAs. Okay, so now they're getting down even further into the diligence and the due diligence for these properties. And what it looks like is, here's Provo, Utah, I should say Provo, Orem in Utah. And then they give you why that's number 1 on their list underneath it, and gives you several different things on the side there. But the job growth is this. It's ranked number 1 in job growth. The job growth from 2019 to 1918 is 4th. So it gives you a snapshot of what and why they picked this. And what this is also doing, folks, for you, let's say you pick Provo and Orem, Utah. This gives you the story that you can now tell your private investors and your people that you want to invest in this opportunity with you, the reasons why they need to invest in this deal with you, right? So that's what we're doing. We're building that story, right? And then also the next thing I use, and along the same lines here, I use this report from CrowdStreet, the best places to invest in 2021. You can get it there at that URL right there. And these URLs will be in the description of the video, so don't worry. But it comes out, and this is from CrowdStreet. CrowdStreet's a funding platform. And the one thing I like about this is it gives you different criteria, right? On the far right-hand side of the screen, you can see as they go into the macro factors, they go into the micro factors, they go into geographic factors, market dynamics. So it gives you a different look than best places, right? Or best cities. So it gives you a different feeling, and also pulls from different reports, calls from the Green Star Advisors, pulls from CoStar, and it gives you a different feel, right? It gives you different information. That's what you do in demographics or any kind of data analysis. You want several different data points verifying your hypotenuse or what you've chosen. Hey, if I've chosen Utah, I want to see Utah on a couple different lists. I don't want it to be on one list and go, okay, well, geez, how come it didn't show up on all these other lists, right? So what this does is gives you the best cities, and another thing I like about this report is It gives you the cities, but it also, if you can see at the top here, it gives you the distinction. It goes into retail, industrial, multifamily acquisition, multifamily development. It breaks it down even further than best places, right? So it gives you, okay, if I'm going to do multifamily acquisition, here's our favorite 25 markets. Boom. In which you go and go, okay, Orlando, okay, well, that showed up on my landlord-friendly state list I just had in Florida. Okay, cool, boom. So what this is doing is you're not only validating your landlord-friendly data you just got, but now it's actually giving you the cities within those landlord-friendly states, right? So again, same thing you use here, this and best places, or I should say best cities, the Milken report, and you compare, okay, great. So let's say Orlando's showing up on both lists. Well, probably a good guess that Orlando is a pretty good state to, or a pretty good city to get into. And it is, and that's what you're doing with this. Okay, let me take a quick break here, folks. If you want to work with us, we're working on taking down an apartment building right now that would be an amazing deal. Any interest in passively partnering up on this investment, please get a hold of me and reach out to me at my email address right there, pat@opportunitycreator.com. And we'd love to start up a conversation with you and see if this works for you. Okay. Thank you, folks. Okay, on to the show here. All right, now we have those different things to do, right? So we just went through the best cities and there's CrowdStreet. Now I'm going to use another criteria to see, okay, is this information we're getting good, right? Another data point, right? I want to see what the net positive migration is or the net negative migration is to states, right? So what I do is I use 3 different moving services that produce this information for me. Again, this is all free information. I'm not paying for anything. I'm not, I just go to my browser, click, 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 I'm there, right? So now what I'm doing is I've got another data point that says, okay, what do I want to know? Well, if they say California is a state that, everybody's, is not landlord friendly. Okay, why? What's going on? Well, is there people moving out of that state or into that state? So I use North American Van Line Services. I use United Van Line Services, and also use U-Haul. Why 3? The top 2 are for people who typically their company pays for them to be transplanted or moved. And the third is usually for people who their company doesn't, or they want to do it themselves. So I'm capturing the whole gamut of people in that. And what that does is, if I'll show you here an example of North American Van Lines, here's their 2020 migration report. Now, does this mirror what I showed you earlier as far as a landlord friendly and a non-landlord friendly state? Yes, it does. As you can see, California is red, and red indicates outbound. Well, if they're so anti-business and anti-landlord, where do you think people are moving out of if they want to start a business or own property? They're moving out of that state. So what it does is gives you an idea. And again, we're just getting another data point to validate what we've already come up with, okay? So this is what it does. So now what happens now, you take these 3 data points or 4 data points, and you come up with your approved cities list. You're not only your state list, but your cities list. So now this is our approved cities list that we're used. This is the states we're looking in, and these are the cities we're looking within those states. How? Just by the same process I just showed you. Now, again, you don't have to be in 4 states. You could be just in Michigan or just in Iowa. But this is giving me, by using this data that I shared with you, Milken report and crowdfunding, the states that are doing well based on economic factors, right? Based on growth, people moving in there. I heard the other day, what was it? Somebody, in Charleston, North Carolina, there's 200 people a day moving into that city. Now, do you think there'd be opportunity if you wanted to open a business, or if you wanted to be be an entrepreneur, or if you wanted to buy or sell houses or apartments there? Of course, because they're business friendly, right? They're business friendly. 200 people a day. Crazy stats. But again, so now we have our approved state and cities list. So now what's the next step? The next step here for you is decide on what you want to do, right? What your search criteria, meaning, okay, I've got my cities, I've got my states. I want to go in here. What do you tell people or brokers, more importantly, what you're looking for? Right? Kind of going back to that focus slides I've had earlier, and think, what kind of class of property do you want to be in? And again, this is going to set this is going to set the tone for you looking in these different cities and states, right? Okay, so are you going to be in class A, class B, class C, class D? Now, if you don't know what those different classes of commercial are, I have a video on my YouTube page that explains those. Okay. We also look at the population of the city, and again, what is your population of your city? Now, some people say 100,000 and above, some people say 20,000 and above, 10,000, whatever it is, you have to pick a number, right? Because what this is doing, you're creating a filter for when you get an OM or a listing agreement, or when you're talking to that broker. Because if you call a broker up and say, hey, Mr. Broker, how you doing, from CBRE? Hey, I'm looking for a deal in Indiana. What's he going to do? He's going to check off the box Indiana and send everything to you. And you're going to spend weeks and days going through and figuring out, okay, well, that's not even a deal for, I don't, narrow your criteria. What class, how many units, how, what age, different things. And again, we look at median household income. I'm going to show you how to find that information out. And we're going to do average home price as well. The bottom 4 bullet points is our criteria. We're looking for class B and C apartments built 1984 and newer, okay? Garden style, high rise, etc. We're looking in populations or MSAs of 10,000 or above, okay, that has an increasing population. But again, I've already done that because I use best Milken report and crowdfunding reports. I'm already targeting cities that are growing, but I want to make sure, even though a state is growing, you want to make sure that that part of that city is growing as well. And I'll share with you exactly how to do that. We have a median household income of 35,000 and above, because again, we're looking for B and C class apartments. Right now, if I was in the D class, or that's a lot different things. So that would be a lower threshold. If I'm looking for A class, that's going to be a higher threshold. I may need to start at 45, 50, 60,000. And again, same thing with industrial, self-storage, all these different things, folks, okay? Because what you really want to do is have a floor of income where, whether if you're opening a business or you're opening a business of an apartment, you want to be able to have people to afford what you're looking at, right? That you're offering. If everybody in that whole area makes 10 grand a year, and that's way below the poverty level of 24,000 a year by US standards, are you going to be able to raise rents? Probably not. Are you going to get a whole bunch of people on government assistance? Probably so. But if that's what you're targeting, that's awesome. That's not what we're targeting. So I'm trying to get you focused. And then we also do an average home price of $100,000 or more. Why? Again, when you're in the apartment building and business, you have to pick cities and states where the entry level to getting a home is higher, or a bigger challenge for people than renting your apartments. If the home values in your area that you're looking for your apartment are at $20,000, and you've got an apartment that you're trying to rent out for $800 a month, there's nobody in their right mind would go in and live in your apartment, because they can buy a house and have nobody overhead with them and have a yard and everything else. They wouldn't rent your apartments. So you need to have that in thing. And again, I just use these as floors, okay? You need to come up with your own criteria based on what class of property you are looking to go into, okay? So let me show you an example of how I use this, right? Here's a listing broken that just came into my email box the other day. And yes, it is from the state that I want. It's in Iowa. We're looking in Des Moines, Iowa. Okay, is it in the city I'm looking for? Yes, it is. So I've got 2 of the criteria met. But now I got to figure out, and I'll share with you how I get to this. Okay, within that city, obviously Des Moines, Iowa, or Detroit, Michigan, these are large MSAs, right? So how do I know that this is an area of Des Moines that I want to go into? Yes, I said Des Moines is growing and West Des Moines is growing, but I want to get to that micro level of that area in that city, right? Because you know as well as I do that you have, let's say, a city that, oh, well, you know, that's the north side. Ooh, you don't want to go there, but the west side's doing great, right? The northeast side is awesome. They're doing great. That's what I'm trying to teach you, is you can have a city, and again, an MSA as large as Des Moines or Detroit Metro, you know, there's a lot of different areas that are good, bad, and indifferent. You need to know that. So I'm going to share with you how to do that. And one way we do that is we go to bestplaces.net. This is going to give us some overall data on the city or the zip code that I'm looking at. Let me share with you right here. And again, these will be in the notes of the video. Okay. But here, let's take a look at what it shares with you in there. Here's the best places listing for Des Moines, right? Here's why I'm checking it. 214,000 population. It's gone up 6.3%. The unemployment rate is 5.4. The U.S. economy is 4.2 right now at the date of the recording. Your median household income is 46,000. Your median home price is 140,000. At snapshot, this looks good, right? But what I want to do is now I want to go down to that next level, okay, and qualify the actual property, right? The area the property's in. Now, I do use this. I wanted to share this with you. Now I want to do is qualifying this deal he sent me in Des Moines. So what I do is I open up Google Maps. I type in the address of the property. I pull that up on one screen. On another screen, and I obtain the zip code of the property. And then the other screen, I pull up this website here, City Data. city-data.com. Okay, so you can type in the name of the city, zip code of the property. I like to use the zip code if I can, because that gives me more of a zoomed in look, and that look will be that. So in the far right side there's the home page of City Data. So you would type in the zip code of the property. All right, hit enter, and this will appear. So you're going to look and scroll down on the page about 2 or 3 scrolls. You're going to come to this map. And this is the map that we're going to use. This is a map based on income. If you can see the top there, it says data that's shared as median household income. Again, I've set that floor for myself at 35,000, right? So I need to say, okay, this is the zip code of where this property is at. It's a pretty good size zip code, but I want to get a little bit further down in my analysis, right? I want to get down to the area of the property, right? So what you're going to do is you're going to toggle back between this city data and Google Maps. So now here's Google Maps. There's the address of the property, and there's the zip code. You should take a look at where this is at in the city, right? So I go back here to this map here. Where do you think that property would be, right? Let me go back. All right, right around that bump. It's got to be in this area here somewhere. That's where the property is. So in city data, I click on this area here because I think that's where it's at, right? And what happens in city data, it clicks and you open up the census block, right? And this window here will appear. Now, if it only appears up here, there's a little drop-down arrow that will display this information. So what this is the census block group, okay, which is a 5 to 6 block radius around where this property is located. I want to explain this side here in more detail. So I've got this, right? So I click on that. That's where, and to unhighlight it, you click it again, and this will go away, and you'll see the property. I know that's where the property is because bouncing back from Google Maps, that's where it's at. There's no way to search based on address here in this mapping. They don't have that ability, which is a bummer, but that's okay. I've got a workaround like we're doing. So let me explain the right side of this screen. There is what you're gathering, right? This is the census block group data, okay? Again, I look for 3 things on this screen. You can look at all the other stuff too as well. It gives you a lot of good data. Okay, again, let's go back to my targets, right? What was I looking for from my median household income? Is it greater or equal to my target? My target was $45,000 and above. Okay, so follow that arrow down, and there's the median household income. It's $20,000, $20,551 a year. That's below the national poverty level of 24,800. Okay, there's the negative right there. Okay, let's take a look at the median home value. Is it greater or equal to my target value of $100,000? Let's follow this arrow down again. Oh, yep, it is. It's 131,300. Okay, awesome, great. I look at the median contract rent as well, and I also look at the unemployment rate. But the biggest thing I look for is residents who live below the poverty level. Okay, I use 20% as a floor, meaning I'll take something that's below 20%, okay, but I don't take anything above 20%. Now, if you follow again this arrow down, 27.8 or 30% of the population in this targeted area, and again, the population they're estimating in this area is 924 people. Okay, 5-6 blocks area, there's only 924 people, so it's densely populated, but 30% of these people are below the poverty level. Not a good area, okay? Again, not a good area for me. Now, if you're looking in D class area or C minus areas, this may be a gem, don't know. But what I've done is I've gotten the listing from the broker, right? I haven't called the broker and wasted his time and said, send me the rent rolls and the T12s, and you spend hours and hours and hours analyzing something only to come to find out that it doesn't work. It's not even what you're looking for. And that's what I'm doing with this video and this learning is I'm sharing real world tips and tricks, right? That cuts down on all the minutia, right? I get so many leads of properties on a daily basis. I have to have a way to quantify these. Yes, no, yes, no, yes, no. Okay, that's what I'm sharing here with you folks. There's a way to do this quickly so you don't get overwhelmed. So another reason I do this and walk you through this is now, because I get another question from people all the time is, oh my God, what do I talk to the broker about? Well, I haven't talked to this broker. I'm just on their mailing list. I've talked to them before on other properties, but now I have questions for them, right? I have questions. I can sit and say, I can call this broker up and say, hey, Cy, how you doing? Listen, thank you very much for sending me the OM, right? Because we go back here, right? He sent me this, right? He sent me this. This is off an email, right? I'm on his bulk mail list. Okay, boom, great. Property looks awesome. I mean, this is great. You know, you got a couple minutes for a couple questions. So then what I do is I would say, listen, I've done some preliminary research here on the area and stuff. Can you kind of help me understand this? You know, it looks like it's a, you know, what class of what class of you know of property is this? What's the area? you know. And if he starts saying, well, you know, it's an A class area, I say, well, wow, really? Okay. Wow. Okay. You know, they're not going to say that because obviously they're going to say, well, it's a little bit of rougher area, or it's becoming gentrified or whatever, right? But what it does is you're opening up that conversation with the broker, right? So now you have questions and can talk. Secondly, it informs the broker and lets the broker know that you know what you're talking about, right? You are starting to talk like a sophisticated investor. You're asking questions. And the thing is, this information may be wrong, and it may be, but you've opened up that dialogue. You may say, hey, listen, you know, they're saying the contract rents are 573. You know, there's only like 900 people in the area. What's the area like? And again, you're asking that broker for more information. Hey, you know, I'm seeing as well as, you know, there's like 30% of the population is below poverty. Is that, are we looking at a D area, C minus area? Always go to the worst, right? Because they're gonna paint it better, right? They're gonna say, well, yeah, well, I wouldn't say a D, it's a C, it's a C minus, oh, it's a high C. Because again, they're trying to sell the property, right? So they're salesmen, God love them, but again, those are questions. Now you've been on the phone with a broker for 5 or 10 minutes, and you get a feel for if you want to move on or not. Again, the pass fail there in the lower right. So then what you do is, if this is something that you want to move on to, then during that phone call on the left-hand side of your screen, you ask for the T12s. You're going to do your underwriting, you need the T12s, or the trailing 12 income and expense reports. I also have another video on my website of what those are, and I explain in detail. Same thing with the rent rolls. So, you know, go back and watch those videos. So if it passes, and this is something that you want to do, you want to do some underwriting. So now, again, you've solved a couple different problems, right? You found the state and you found the city, and now you've got a broker sending you deals. Now you've qualified that property, right? So now you say, okay, well, this looks good. Okay, well, thanks, Cy. I appreciate your input. Yeah, it's great. Hey, why don't you send me the rent rolls and the T12s? Where can I get those? Then you start your due diligence or your underwriting. See, I don't do underwriting and waste all my time, you know, pulling down data from the website of the broker, only to find out that the area sucks, right? And I did that for years, and I said, okay, I got to stop this because I was wasting so much time and energy getting this thing on the road and figured out, oh my God, this doesn't work, only to find out the area was not even an area that I want to put in, right? So you do your underwriting. Again, call back to your broker friend. Again, you have now questions. Hey, thanks much. I appreciate you talking to me the other day. Hey, I've got some questions, but if it looks good, you put an LOI on it. Okay. Or you do on the right side of the equation here, or the right side of the page. In for me and for us here, we'd say next, thanks. I'm not gonna pursue, excuse me, I'm not gonna pursue this. I've already placed a call into the broker, and I will talk to him and thank him for sending it to him, and to verify this information. Hey, listen, you know, just real quick, I did some quick due diligence. I'll still do that phone call, right? Before I say next or pass or fail on this, right? But again, I'm calling that broker and talking to him so he knows my voice. We interact. You know, hey, thanks for sending it over. Great looking OM. That's awesome. Did some, you know, preliminary research here. You know, my research is coming. This is like a C minus D minus area. Is that kind of the feeling you're getting? Oh, no, 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 you know, or, oh yeah, that's about what it is. So I can then, on the right-hand side, move on, right? I spent no time underwriting. I probably spent 10 minutes of my time. Actually, it's less than that. It's probably about 3 minutes because I got the process down pretty quick. And you thank the broker and reinforce what your buying criteria is. Hey, listen, thanks much for this. This is not going to fit. We're looking in better areas, you know, B, C areas, you know, or, you know, a C minus property in a B area. They understand what that is. Don't think that they don't, right? You just tell them, hey, look, I'm not looking in the hood, you know, but please keep me on your list. I'll keep calling you back. And again, you're building that, reinforcing that network, right? That networking with him or her, right? Always respond back to them, right? And this gives you that ability. And I hope that I've shared with you at least a little quick process here that can get you closer to doing the left side of the thing, the screen here, putting that letter of intent in to get yourself the first apartment building, as well as buying in an area that's going to benefit you, the area that's you're going to find returns for your investors, or you, if you're going to buy the property yourself, that it's going to be a real good pass, right? A real good, property for you instead of a failure. Okay. And that's what I was hoping to help you with here, at least with this quick, short presentation here. And again, thank you very much for joining. Again, if you want to work with us, we're working on taking down an apartment deal. That would be an amazing deal. Any interest in passively partnering up on this investment side, please reach out to me. And there's my email. It'll also be in the description of the video. Thank you very much for your time, folks. And also, if you're looking for learning more, we hold these masterminds bi-weekly on Wednesdays at 7 p.m. Eastern. They're usually 7 o'clock, and sometimes you go a couple hours, but it's scheduled from 7 to 8. And if you want to register, you have to register first. You will have to have a password. You also will have to, get that code to get in as well. But you can also go to opportunitycreator.com, Zoom-mastermind-calls, and see our upcoming guest, as well as watch some videos of our previous guests. So thank you very much, folks. We appreciate your time and effort, and you have a great, great night.